In yesterday's episode, we did a deep dive into Silicon Valley Bank and the fractional reserve system that underpins global banking. We examined the market structure in 2008 and called out, where are we now? Are we at this point where the markets are retracing, or we are at this point where the markets are coming down? We can see, despite emergency measures, the rout in banking stock is extending. Where there's smoke, there's fire. From Bloomberg, US banking regulator lets bid for Silicon Valley Bank fail. A lot of people are saying the Fed must pivot. If it keeps on raising interest rates, it will basically break the entire financial system. The next FOMC meeting, which is under 9 days away, we can see the probability of a 50 basis point increase, and this is right now, is 79%, up from 59.8% just 24 hours ago. There is no pivot on the table so far. We've seen historical market rallies before FOMC meetings, and this time is no exception. Just literally the CPI month on month and year on year and core CPI is just about to come out, followed by the core PPI, core retail sales, and PPI month on month. It's a really heavy data week. We're going to look in this video about why the market is up, what it means, and what is actually happening inside the engine of the financial markets. Stay tuned, it's going to be great. Hi everyone, I'm Ken from Crypto Trading KS. My goal is to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. By sharing my experience in financial markets of more than 30 years. We can see in the main markets, the VIX spiked in the last trading session. What's really interesting to note here is there's a flight to the bond market. Now this is significant. The bond market is absolutely and utterly huge. As of 2021, the size of the bond market is estimated to be $119 trillion worldwide. There's a lot of people cashing out of the stock market and going into the bond market. And when bond prices rise, what happens to yields? They fall off a cliff. We're also seeing a flight to safety in terms of gold and also in terms of Bitcoin. Gold and Bitcoin are driven by different things than the bond market. When we look at the failure of the DXY to keep its upward momentum, this is basically driving gold through inverse real rates and of course Bitcoin. We can see recently that oil has broken down. Why is it breaking down? These charts actually tell you the story. The VIX spiking means that investors, especially a spike of this magnitude, this is coming up very, very fast, almost as fast as the federal funds rate increases. The VIX historically spikes around this time of the year. That's something to be aware of as well. But the spike in the VIX, the fall off in oil, the spike in gold, the failure of the dollar, and the spike in bond prices all points to a cracking financial system. Especially concerning is the fall-off in risk appetite through junk bonds and high-yield corporate bonds. The key for us is to understand there can be short-term rallies, but we've got to look at the overarching picture. When we look at the DXY, a lot of retail investors and traders would believe that the DXY is just going down from here. Let's have a look at it. The DXY is currently 103,640, and when we look at the DXY like this, it has a lot of negative momentum, but we don't look at the DXY like this. We look at the DXY and all our charts through the CTKS method, which literally gives us X-ray vision as to where smart money will enter, as to where the algorithms will step in and either buy or sell. One thing to bear in mind, with the DXY, there is considerable smart money buy levels between 102,991 and 103,178. We can also see that the DXY is just a little bit weaker than this smart money sell area because the price is below of 103,741 to 103,883. The thing to also bear in mind, up around this 104,958 is a lot of heavy resistance. What we could actually see is a dip down to this 102,991 level and a rally back up to 104,958. You must keep this in mind. What does that actually mean, and how does it impact your portfolio? If we see the DXY to continue to come down, markets will rally, but as the DXY turns around, the markets will turn around also. They'll go down. This is pointing to a potential short-term rally, but a potential dump, so we must be mindful. Please keep your eye on the DXY levels. It's also helpful to look at the euro versus the USD, and when we look at the euro, we can see these weird patterns playing out. But are they so weird? Let's overlay the CTKS method to find out. What we can actually see is the price, and this is the price of all financial instruments. They tend to rebound between smart money sell levels and smart money buy levels, especially if they're major buy levels, and ping pong between them. Let's actually go a little bit further forward and see what the euro is actually doing. You might remember that I pointed out that this particular level of 107,199 to 107,695 is dramatically important. There's a lot of strength, sell strength in that particular area, and the euro is at 107,284. In other words, as the DXY comes into support, the euro versus the US dollar is coming into resistance. This is how we can stack probabilities, and the DXY is very, very important to understand. Let's have a look at gold. What did gold do, and what does the CTKS method reveal about that? Inside gold's market structure through objective dynamic market structure, which can only be revealed through the CTKS method, we saw enormous buying support in between 1804 and 1830 for gold, combined with the Silicon Valley Bank dramas. Gold, just like bonds, became a flight to safety. Gold's current price, 1913, is just below a very steep and strong now smart money support level, but it could turn to resistance at 1898. One thing to bear in mind, if gold actually just keeps on rallying, and it could do so, the next major resistance, structural resistance, very strong structural resistance, is around the 2016 mark. What we need to understand is the S&P 500. When we look at the S&P 500 without the CTKS method, it's a bit of a mess. What does it actually mean? Well, let's overlay the CTKS method to find out. It reveals the story incredibly well. What we saw with this sell down, with the Silicon Valley collapse, what actually occurred? It hit smart money buy levels and ping-ponged in between them. We're seeing this consistently. And everybody who knows how to draw up the CTKS method understands these numbers, these lines are not manipulated to fit price action. These come from all of price action. So what are we seeing? And what is the drama with this? This particular area from 3880 up to 3938, and the SPX or S&P 500 is currently 3854, so it's below those levels. That was incredibly strong smart money buy levels, but that banking collapse of Silicon Valley Bank actually broke the market structure. As you can see, the market is currently in resistance. There's a lot of overhead sell pressure now. When buys turn to sells, and especially if they're very key or major buy levels, when price is above, but then price goes below, we must be careful, because we've probably witnessed a cut under. I talk about this a lot inside the masterclass. Your cut lines are very, very important to understand. And when we zoom out and look at the 9 sell-offs and recoveries in the S&P 500 since 1966, we can see we've had a cut under. Price is under a level of support. Does that mean the price will just plummet from here? No, price is always moving in a wave, and that's what confuses people, traders and investors inside markets. When you get a retest, for example, something like this, people just get thrown off and they say, oh, it wasn't so bad, it's fine. But retests are very, very common. What you're actually witnessing inside the market is a retest, even though there were broad sector gains, except of course for financials. A lot of people will be mystified by all this green, and they'll just simply say, there is no problem, everything is fine. The banking system is incredibly important to the economic system. When banks fail, economic systems fail also. We know that Bitcoin cannot escape the stock market's gravity, and so we saw a technical bounce. But was this bounce guaranteed? No, it wasn't. When we look at Bitcoin's technical structure, and Bitcoin is currently trading at $24,324, the major structural support inside the market is from 16,252 to 16,687. There is a minor level of support at 18,000, and the next major selling resistance, smart money will come in and pretty much hammer Bitcoin at 28,000. Our focus is on trading the up and down movements. So what happened inside here? Let's look. So many things are going on inside the economic system. Let's just zoom in a bit. President Biden came out to do a speech on the stability of the banking system. The words of politicians are always the same. Everything is fine. No need to panic. And the market said, fantastic, there's no problem with that burning building over there. I'll just go back and sip my latte. And of course, because there was no problem, there was a closed-door Fed emergency meeting as well. Please let me know in the comments, do you think everything is fine, nothing to panic about, or do you think there's a systemic problem inside the financial markets? What are the next things that are impacting the market? We've seen recently that the US CPI data is coming out, then retail sales, the PPI, building permits, consumer sentiment, and then following all of that fun and games, the FOMC meeting. Many people are expecting a pivot. They're expecting not a 50 basis point increase. How could that happen? It can't happen. But that's not what the street is telling us. Wall Street. These percentages may go up and down, but this is not a good look, especially after the president came out and reassured everybody that the burning building isn't actually burning. One thing that I said yesterday, it's important to get your mindset correct in times like this, because all investors become traders anytime they buy or sell. There's just different time periods between investors and traders. And sometimes investors feel greedy if they actually time their purchases or sales. There's nothing wrong with being sensible with your entries and exits. Sometimes investors think that if they win, somebody else is losing. This is a very common perception for people to have, but it's not the truth. The market rewards synchronization and it penalizes desynchronization, and the price of the markets is always moving in a wave. Just think about it this way. If you're an investor and you win, does that mean that you made a lot of other people lose? Of course it doesn't. You're just in the financial system, and that's what the financial system is about. It's about applying your knowledge and also your emotional control. It's actually Rule 138 that all investors become traders every time they buy or sell. As an investor, it's vitally important that you know how to trade. As every investor is a trader, anytime they buy or sell, every investor is already a trader. So if you make money investing, you're making money trading, because actually that's what you're doing. And I had a very heartfelt comment in the comment section on yesterday's video, and it goes like this. I'm only an investor who can't trade. Should I be taking my money out now until the markets bottom out, as I don't expect any gains till the next bull run? Or do I hold on for dear life, hodl? Or will there be a risk of losing everything doing that? Opinions are much appreciated. Thanks, Ken and CTKS family. This is a really beautiful comment because it exposes something that is very, very common. It exposes the fact that many people just label themselves as one thing or another. You're an unlimited human being. You can be anything that you want. You can sit on both sides of the fence simultaneously. Just make sure you pick a comfortable position. I want to show you how you can trade any market, and this is from yesterday's market. I said that I was rebalancing my portfolio, but that doesn't mean I'm staying outside the market. I'm always in the market. What you can see here is I went into TRU and I saw that the price was bottoming out at around 10.53. So I bought and sold later. Now I'll explain what I'm actually doing here, but I'll just go on a little bit further. And of course, I will share all the trade history with you as well. What did I do next? I took the same amount of money that I just made some profit on and reinvested it into the market. You can see here that I sold at 114. I saw the market spike up and I said I'm going to place my buy order about midway into that particular candle, and that filled it at 1115 or 1115. Was I concerned that I missed the bottom? Absolutely not, and I'll explain why later on as well. And I immediately set my sell level up at 1191. I just want to go through this and show you the concept. Don't forget, this is a market that was pretty bananas yesterday. What did I do then? I took the same amount of money out and I placed another buy order. Do you think you know where that buy order may have been? I actually placed the buy order at 1096. I believe due to the market structure and the failing of a cross under here, that the market was going to retrace to this particular local low area, and it did so. So where did I place the sell order? Immediately after the buy order filled. I was just conservative. I placed it just below this area of resistance, and you can see that at 1150. Do I beat myself up? Ken, you didn't sell the exact top. You missed out on money. No, absolutely not. As traders, we always look for the sweet spot in the market. One thing that I would like to point out, this is the same amount of money turned over 3 times. Just having a look at the trade history, you can see that $500. And what does maker mean? Maker means that I put the order in and I waited for it. What does taker mean? It means that I bought when others were selling. I bought at market. All of these trades are maker fee trades, and that basically means I waited. So let's have a quick look through. You can see at around 9 o'clock, I put this particular buy order in at 1053 and it sold at 1046, and it was just a modest profit. I wasn't after a lot because I want to show you how to make money in any market, and this applies. You can do this every day. And then what did I do? I actually bought on red at 11.15. Why are there 3 orders here? What is going on? Well, it just means that it took 3 goes to actually fill the order. This is common inside the market. And where was the next sell? At 191. And you can see that took quite a bit of selling activity to fill that order. I'm just going to show you a slightly different version of the trade history so you can see that this 500 turned into 528. Then I took the same 500 and turned it into 533. And then I took the same 500 and turned that into 524. If I had have bought the absolute bottom and sold the absolute top, it would have been a 16.49% return. But you know that's really, really difficult to do, and it's not required either. But this is the kind of pressure people put themselves under. They feel they must buy the bottom, and if they miss it, they just wait. And they must sell the top. This is what keeps a lot of people out of the market. I'm trying to show you here that you can be in the market, but you must know what you're doing. This type of trading is taught inside the masterclass in TG23. It's called cycle trading. And you can see what I actually did is I just consistently rolled $500 over. I made about 28 profit, then 33, then 25, $87 profit just by selling reasonable amounts just all the way through. And you can do this too. What was the net impact of doing this? I actually turned $500 into nearly $590. Literally a little over 17%. But if you look from the bottom to the top, it was only 16.5. This is why professionals don't care about tops and bottoms. We actually care about participating. Now, what if I didn't put 500 in? What if I put 5,000 in or 50,000 in? You can see the returns can increase substantially. I've seen a lot of influencers basically say, oh, I made $800,000 profit in this particular day. If they're making $800,000 per day, that's not kind of what you can do because you need to work yourself up. For example, if you want to go to the gym and work out and have a physique like this, but you have the kind of opposite physique at the moment, what this particular person did was they probably started in a similar position. They need to work their way up. It's not something that just happens. Don't be pulled in by this very, very misleading way that people talk about making returns. You must start small and scale. When going to the gym, a lot of people, when they're just starting, in truth, they could struggle with the immediate weight because they're just starting. What they want to do, they see other people lifting all these heavy weights and they want to go and lift those too, to say, hey, I'm in there with you. But if they do so, they can do serious damage to themselves. You must work up to these things. I have a great affinity with gyms because I used to basically just go all the time. I loved the gym. And I could see many, many people just starting. They were going for these heavy weights and they were straining themselves. They were literally, they were doing a lot of damage. And I lived in this area. And my advice to them was to basically say, please start small. Don't feel that you're in a rush and don't feel that you need to be judged by what other people do. You're on your own path. Take your time. Don't forget that what we were actually doing was only taking out a little over 5% in each trade, and they actually mount up. If you make 5% on one trade and 5% from the same amount of money on the next trade, how much do you make? Please let me know in the comments as a percentage. The role of percentages is very, very hidden from the Main Street view. So when you understand how percentages either make you or break you, it is a game changer. Thank you to everybody who commented on the videos yesterday and the day before. Just so many incredible shares there. Bruna said in yesterday's video, it's wonderful to realize how everything in life follows the same pattern. Once we recognize that, we expect and prepare ourselves for Kensho, growth from temporary gain, and Satori, growth from sudden insight moments, the ups and downs, the red days and the green days. We understand that life moves up as much as it moves down. And instead of suffering, we prepare ourselves to embrace the lessons from the flow of life. We learn to move with life with courage and balance. The reason that I shared that trade with you is because I want you to understand that you can take very small amounts out and they accumulate dramatically. And it doesn't matter what the market structure is, you can profit from it if you know how to trade. And of course, knowing how to trade is just part of investing. Because investors buy and sell, you should do it as effectively as possible. And you're not taking money out of another person's pocket by doing what you do with knowledge and effectiveness. Remember, the market penalizes gambling. We do our CTKS code, our daily three-dimensional risk management each and every day to get into synchronization with the market. In truth, the market just transfers money from the desynchronized to the synchronized. That's all it does. We know that we control the trade or investment, but it's the market that controls the return. And that return will be based on your active learning, your knowledge, and your courage. Always first anticipate that the market can go against you, go nowhere, or go for you. And as a community, we buy long at spot. We don't use derivatives. There's nothing wrong with using leverage if you know what you're doing. But if you don't know what you're doing, using leverage will absolutely decimate you. Even not using leverage, if you don't know what you're doing, will wipe your account out. This is the way that the markets work. You must have knowledge. I'd like to say that knowledge is enough, but it is not enough. After more than 3 decades in financial markets, if you don't have a positive excellence life focus, what you'll find yourself on the wrong side of life and on the wrong side of the trade and on the wrong side of the percentage. Getting to the right side of things is really, really important. One way to get there quickly is through daily positive affirmations. Our brains are wired for survival, and the financial markets just gear that up to the nth degree. When you put your hard-earned money on the table inside the market, you don't want to lose it. Fear reigns supreme inside financial markets, but you must try to sidestep that fear and eventually convert the fear into courage. One of the best ways to do this is to start small and scale. That trade I shared, if you can actually look into that trade and see what I did, you'll actually understand that you can make money in any day, any market. You don't need the 1000x. You'll get them by just doing little X's along the way. Not even X's, just small percentages. When trading and investing, we must de-fear our lives. We must insert courage instead. And whatever decisions you make, you must understand that you're the only person who can make your decisions. And a decision is not final. You can see what I did yesterday. I said I was going to cash. Yes, definitely, because the market is throwing very negative signals. But I'm always inside the market. I'm just more cautious about what I'm doing now. And of course, don't worry about what other people are doing. If you're entering a gym and everybody's pumping the most heavy weight on the planet, don't worry about it. Let them do whatever they want to do. You do what is right for you. The CTKS Creed, through daily positive affirmations, creates better habits, and better habits create a better life. Let's go through it. These are statements you say to yourself. The I is all about you. Okay, let's go for it. I know the universe is designed to make me succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. All the best, and bye for now.